Sir, I'll hand over the presentation to you, and you can continue.
Cool. All right. Thank you.
Yeah,
Thanks
and
for that
thank you again,
introduction.
sir. Thank you again, sir, for giving us this time today.
No, it's my pleasure. I hope for the time that everybody is giving me today, there is something that they can take away from the presentation and become better investors. So, hoping that there's some value add. I'll quickly share my screen, and there are a few slides that I have. So the way we structure this is that we will do a few slides which talks about basically why one should be looking at US investing in the first place, being in India. Then the second bit is just some regulations, taxation wise, how does it work? And the third section is how can you think about portfolio creation when you start investing in the US? And then we'll go into a quick demo of how the platform works, really how technology has simplified creating a brokerage account miles away, sitting in another different country. So that's very exciting. And then we can, of course, do Q&A, which is the most interactive part, the best part, which I love. So do share any questions that you might have. So diving in, I just wanted to start by talking about one of the key concepts of investing and creating a portfolio, which is diversification, right? So to be able to create a good portfolio, you want to diversify the investments that you make. And the reason why you do it is to be able to spread your risk across different investment classes or different types of investment opportunities so that all of your return is not tied to just one thing, right? If you invest 100% of your portfolio in one stock and it goes down, all your wealth is gone. So prudent investors diversify their portfolio so that they can get returns from different types of investment opportunities. And so there are four main pillars of diversification to creating a strong, sound portfolio. The first pillar of diversification is asset class. So basically, you want to be able to invest into different types of asset classes, which is say equity, bonds, real estate, gold, so that it's just not all in one particular asset class, right? The second type of diversification or the pillar is industry. So you don't want to have all your money in one industry. You want to invest into, let's say, banking. You want to invest into telecom, IT services, technology, so that you're not tied to one industry's fate, right? You're not tied to, let's say, banking, for example, and some regulation changes and all your portfolio goes down. So you want to diversify industry. And then third is you want to diversify time. So you don't want to invest all of your money in one go into a particular or a few basket of securities or into, let's say, a property. You want to diversify the investment that you make across periods of time. And there the SIP culture has really helped us all, where we now have started doing like a monthly investment instead of one investment in one go. But the fourth pillar of diversification, which is geography, is the one that's actually been missing in almost all our portfolios and now has started to change. In terms of geographic diversification, what you want to do is you don't want all your money tied to one particular market or country or one particular currency, right? You want to be able to take the advantage of investing across countries, across the globe, and that helps you diversify even your geographic exposure. And so today what we are going to be talking about is how you can diversify geographically and why you should do it. And that the fact that it is the need of the hour right now, it's not a choice anymore. And the US markets through these technological solutions provide a very good option to do that. So in the first section, just wanted to tell you 7 main reasons why you should look at US investing. And some might appeal to a particular audience, some might appeal to another. But even if any of these reasons strike to, if any of these reasons call out to you, you should look at investing internationally, right? One is, of course, you have the opportunity to invest into the world's biggest market. The US markets now, I mean, they keep ranging between 35 to about 45 trillion and capture more than 50% of the global market cap. Compared to India, where we have about 2 trillion and about 3%, right? So you want to be able to get access to different kind of opportunities and to be able to do that through the largest market basically gives you a lot of depth, a lot of different diverse opportunities, and you get a lot of volume which happens to the US market. So you can take benefit of the liquidity that is there. The second reason is just from a return standpoint, right? And you probably know that the last decade has been great for the US market. Of course, just talking about the last decade doesn't mean the next decade will be great. But just from a return standpoint, there are returns to be gotten, is what I'm trying to say. It's not just in a growth economy like India where you can get returns. So over the last 10 years, the S&P 500 has given about 11% returns on an annual basis, versus the Sensex has given about 7%. And this is both in local currency. So the S&P is in dollars, whereas the Sensex is in rupees. Now, if you add to it the fact that you actually invest in dollars in the US market and that the rupee has depreciated. So basically the value of the rupee for $1 has reduced or has increased, over time. The value has reduced, but the rupees needed has increased over time. Basically means that your returns are actually even higher. So 10 years ago, every dollar was worth 45 rupees. Now it's close to around 72, 73 rupees, right? So over the last 10 years, on an annual basis, the rupee has lost about 3 to 5% against the dollar. And that's largely going to be true as long as we are still dependent on our major commodities as essentially oil for import, and the inflation in the country is higher. So that adds to the return. So if you combine both and look at the returns of the S&P 500 versus the Sensex in the same currency, then in fact the S&P gave about 17% return versus the 11, and the Sensex stays at the same, right? An annual 7% return. So almost a 2x return that you can get from investing in the US markets. Now, this might not hold true in the future, but just saying that basically there are returns to be gotten. And so if you diversify your portfolio, you reduce the risk for the same amount of returns that you get. The fourth reason is that you basically get the opportunity to invest in a lot of the sectors that you don't in India, right? And the major one is, of course, just technology as a bucket. If we believe that technology is the future, then being able to invest in those companies that are going to be the future is something that you should be doing, right? And so that we get left out of being in India. And so on the left, you can see how the ETF, which invests in technology in the US, has outperformed even the index. And so you get the opportunity to invest in technology. But what you also get to invest in is companies that are working at the cutting edge in their field, which will be fields that are going to be great or large over the next 10 years. So you can look at artificial intelligence, you can look at CRISPR, mobility, a lot of electric vehicle companies that are now going public. So you get to be able to invest in those companies which are small now, but will become the next Apple, Google, Facebook, right? And those companies are getting listed in the US markets or on the US markets. And that is one big opportunity that we get left out of. The fifth reason is basically what I was talking about risk and return. And so when does the risk of your portfolio become less, right? It becomes less when you invest in diverse assets that are not moving in tandem with each other. So you don't want to invest in two assets which both go up and down at the same time. Then your risk hasn't reduced because you haven't essentially nullified the returns, right? So here, what we've seen is that over the past almost 10 years, the correlation, which is a measure of how two markets move in tandem with each other, the correlation between the Sensex and the Dow is actually quite less. It's about 0.36, which means that you're actually improving your risk return profile by investing in the US market. And the second sort of measure of risk is standard deviation. Basically, how much does the price move up and down? And there also the Dow has been less volatile. So that helps create a better risk return profile for your portfolio. The sixth is, if this is very specific to an individual, but if you have any specific dollar goals, like for example, you want to send your kids abroad, or you yourself want to go abroad to study, or there's a wedding that you want to host abroad, or you want to migrate, all of these are goals that require foreign currency. And so being able to save in the foreign currency is something that will help you there. And the last reason is again a narrower one. So I've gone from broad to narrow, narrow, narrow. This is basically if you're interested in certain companies that are listed here and have their parent companies in the US, it can be more efficient to actually invest in the parent company itself. So what research we did was basically looked at the valuation of these parent companies in the US, and we realized that in India they trade at actually the three times more valuation. So they trade at 3 times their price to earnings, but the returns are not as much as the valuation gap. So the returns are not 3 times of the valuation that you're paying. So basically, you can be more efficient if you're investing in the parent entity. So these are the different reasons that we see people invest in the US markets or start investing and creating a global portfolio. The next section I'll just touch upon what the regulations are around direct international investing. So if you want to invest if you want to create a brokerage account in the US, what kind of regulations will you be dealing with? The number one that comes to mind for a lot of people is taxation. And so when you look at taxation, there are two main things that you look at. One is the capital gains, basically how much tax you have to pay on any profit that you're making on your investment. And then the second is the dividends. What are the dividend related taxes that you have to pay? So in the capital gains bucket, basically it's treated in India as unlisted shares. So you would pay 20% of tax if it's a long-term holding, which is more than 24 months, and you get indexation benefit there, which means that the tax percentage reduces the longer you hold it. And if it's a short-term income, so basically less than 2 years, if you sell it before 24 months, it comes as per your income tax slab. There are no taxes that you have to pay in the US. So there's absolutely no foreign tax filing or anything that you have to do in the US. Whenever you sign up on a platform like Vested, on the back end, we file a form telling the US authorities that this is an investor that is non-US resident, so they don't need to pay any taxes there. Then on the second bit, which is the dividends, here basically there is a withholding. So in the US, 25% of the dividends are withheld, and what you can do is you can comment in terms of the voice. Is it clear or is it not clear?
So the voice is coming clear. We are recording the session. So if any breakups are between, we'll share the recording nonetheless with everybody.
Okay, cool. I just wanted to make sure. Okay, perfect. So I was just saying, so in terms of dividends, basically those dividends, there's a 25% withholding. So you will get 75% of your dividends in your US brokerage account. And what you can do is you can take credit for it when you're filing your taxes in India. So you can basically say that, okay, I've paid this much in the US because there is a double tax avoidance agreement between the US and India. I've already paid this much. I can offset my taxes in India by that. So that's how taxes will work. And I'll talk about, when I go through the demo, I'll show you how we help to simplify your tax filing as well. In terms of regulations that you need to be aware of, so there are two countries, right? So the US and in India, because it's cross-border. In the US, so we are licensed with the regulator in the US, the SEC, as an investment advisor. And what that does is it basically, essentially, we have fiduciary duty. So we have to make sure we act only in the customer's interest. And we go through audits by the SEC. So since the exchange or the country in which we are placing trades is the US, we have a US license and the regulator oversees us there. In India, the regulation that you need to know of is what is called this liberalized remittance scheme. So something that the RBI issued to monitor how money is moving out of the country. And what it entails is that an Indian resident can transfer up to $2.5 lakh every year internationally. So there they have defined different purposes. So they have defined certain purposes for which you can transfer the dollars. And under those purposes, one of them is investments abroad. So it is perfectly legal, allowed by the RBI. As per the regulations, the banks, when you transfer the funds, when you transfer INR to US dollar, the banks have to comply by certain regulations the RBI has outlined. It's majorly reporting. But for an Indian resident, it's perfectly legal. Up to almost up to $2.5 lakh per individual, you can transfer internationally to invest. So that's on the regulations. The last section that I will talk about before going into the demo is the portfolio allocation. So how can you think about what allocation you should do in the US markets and how to create a portfolio there? Because it's a new market, right, for all of us. I mean, we know these big brands, but are they the brands that you should be investing on? How should you think about your portfolio? So what we typically see is that investors invest between 5 to 20% of their portfolio to the US market. So that is a good number to keep in mind as you think of creating your international portfolio. And you can start with a small allocation, and then over time, if once you get comfortable, you can increase that allocation as part of your wealth. So it's essentially an additional asset class that you're adding onto your portfolio and creating more diversification, right? Once now you've taken a call, okay, this is the percentage of my wealth I want to invest internationally, you can look at basically creating portfolios in a few different ways. One that we talk about in terms of a model portfolio takes advantage of ETFs in the US market. So ETFs are essentially like mutual funds, but traded on the exchange. And the US has a wide variety of ETFs. Unlike in India, where the ETF market is still developing, there are almost, I think, around 2,000 ETFs available in the US market. And you should be taking advantage of those to create a portfolio, unless, of course, you do active research and you've identified certain companies and you know when to enter and exit and all of that. If not, then basically taking advantage of say, a small universe of ETFs is something that will help you out in the long term. And so on our platform, we've created some of these portfolios which take advantage of different assets that are available. And so here I've shown a quick graph of that. Basically, what we've done is we've used 3 asset classes, which is equity, debt, and gold. And based on the different risk profile that you might have, the allocation to these 3 buckets changes. So if you look at the first 3 ETFs, they're basically equity ETFs, which is a small cap ETF, which is a technology ETF, and a high dividend yield ETF. And as you go from conservative to aggressive, the allocation overall, the sum of these 3 it changes and becomes higher the more closer you are to aggressive. And then we have 2 debt ETFs, which are basically, these are treasury bonds. So the US government bonds, the long-term US government bonds. And of course, the US government bonds are one of the least riskiest assets that you can invest in. And so they take advantage of these treasury bonds and basically there are different allocations based on the risk profile. There's a long-term and a medium-term US treasury allocation. And then lastly, there's a 5% allocation to gold as well, which helps us hedge against inflation, right? So this is one way where you could look at creating a portfolio. Of course, it doesn't give you the stellar returns that a Tesla might have, but for the long run, this is something that you can just keep investing in and forget, right? So in terms of returns, if you look at how these 3 portfolios have done, this is a little dated, but basically over the last 1 year, a conservative would have given about 19% versus an aggressive about a 23%. So of course, the conservative one gives you a lesser return, and you can see that if you look at the all-time returns as well. But what it does is it also has lower volatility. So basically, your portfolio going up or down is much lower if you're of course, a conservative investor. You don't risk movements in your portfolios as much. Whereas in an aggressive, your portfolio could have moved down 20% or up 20% because of volatility, right? And so depending on the goal, like for example, let's say you want to send your child abroad in 2 years, you might want to be more conservative. You don't want to lose the wealth that you have saved up already, versus you can be more aggressive if it's a goal that is 10 years down the line. So this is the comparison between the 3 portfolios. And I can pause and take 3-4 questions right now and then move into the product demo, or do the demo, I mean, right now itself. Either way works for me.
So we can do the demo, then I'll have Abhimanyu, he'll read out all the questions and you can answer them accordingly. You can selectively answer them or you can take all the questions.
Okay, sure. So let me then switch my screen. I'll basically show you guys how you can go about creating an account, and then what does the platform look like? What are the different things you might need to know? So give me a second to change up screen. So, all right. Okay, cool. So this is, let me see if it's still logged in. Okay. So this is what you will see as somebody who signs up on the platform. So you'd basically go on to app.vested.co.in, and when you go on there, this is the dashboard that you will, once you log in, this is the dashboard that you will land on. So we have a mobile app as well as a web application. And what you can do here is you can play around with the different portfolio creation options that are available. I'll quickly walk you through the dashboard and then go through like a sample KYC journey. So these are the multi-asset class vests that I was talking about, which are conservative, moderate, aggressive, and the different risk profiles. So you can actually go in on each of these. We call them vests. Basically, these portfolios are called vests, and so you can go in and see essentially how the portfolio has been doing. And here you can see the different allocations that are given to the portfolio as well, and basically what the returns have been over the last few years and what the volatility has been as well. And then you can compare them with each other. This was a view that I was showing you earlier, and see how the volatility has changed. So these are multi-asset portfolios, multi-asset class vests essentially. And then we also have portfolios which are theme-based. So there's one which is called software as a service, one which is called moat, basically invests into companies that have a certain business advantage in their industry. So if you want to easily create a portfolio, you can just buy into one of these, and we help with the tracking, everything. Here is the allocation that you'll be buying into. So it's similar to kind of portfolios that you might want to create, and in one click, basically you can buy all of these shares and also track them in an easy manner. We tell you exactly how we've created these in the background. So that's these vests. Now you might say that you have your own strategy and want to invest on your own, so that's completely fine. So you can here explore. So we've created these collections which make it easier for you to discover different kind of investment opportunities, and of course there are top movers. Here you can see how GameStop got hammered yesterday, but it's I mean the last few weeks have been a little crazy, but overall here you can just go and look at different opportunities. Let's say you want to invest into electric vehicles. That's the newest collection that we introduced. And so unlike vests, here we don't give you any kind of allocation. We just filter all the companies for you here. And let's say you're interested in Tesla. So here you can go in and check the share price. What we recently also did was we introduced charting. So anybody who's into charting can just click on advanced charting. It opens up another window which allows you to basically do your analysis and look at different kinds of charts as well. So this is for Tesla, but yeah. So this is the essentially the stock details view. We'll be giving a lot more details here soon as well. And now let me quickly go through a KYC journey. It's all online, so I mean it's super straightforward. What we need is answers to certain questions. So this is basically for investing in the US. This is all required from everybody who opens a US brokerage account. Don't put in any number. And so in fact, now what we've done is our KYC approvals have become even faster. So we've improved the process significantly. So it'll become faster and faster for us to be able to open accounts. Earlier, it used to take about 1 to 3 business days. It still takes about 1 to 2, but it's becoming faster, unless of course we need some more documents from you. So these are some questions that you need to be able to answer. And
so I'll give you my example only. Like I opened an account with Vested and immediately it got approved. But for trading and for investing, it just took like 2 days, and not even 2 days, like a little over 24 hours for the documents to get approved. Otherwise, everything was approved. I could add funds by, a little over 24 hours. So the process in itself was very fast.
yeah, I'm glad to hear that. And it'll become, now it'll be down to hours, in fact, within the same day as well. So that's the hope. We're working on that as well. And another thing I'll just mention here, and even NRIs can use the platform. So if you file your taxes in another country, then just click here, and you'll need to give us the tax ID in your country. But if you're from India, of course, just pick India, and let's pick student for now. And then for documents, we basically accept 4. So we accept driver's license, passport, and PAN card and Aadhaar. So accordingly, if you can provide to us any of these documents, then we can, on the back end, we upload it. And let's say upload. Yeah. So you upload your Aadhaar, enter, I'm just entering a random PAN. And the next step, so for anybody who wants to sign up, we basically have 2 plans. And the basic plan is free to sign up. It has a 399 rupee account opening fee. And both of these are 0 commission. So we basically don't charge anything per trade if you want to start investing. And what we charge for, so of course, the subscription, the account opening, and if you take or if you buy into any of the portfolios, we charge for that value add. Basically, since we are doing the research and creating those portfolios, we charge a $3 fee whenever you to buy into those portfolios, and a 0.5% annual maintenance fee for the portfolio. So this is all these vests. And then there's a withdrawal. So I'll talk about fund transfer related costs in a second, but there's a withdrawal fee which gets waived off if you're a premium customer. And as a premium customer, you get additional access to those multi-asset vests as well, which is not available for basic. So that's the two tiers that we have created right now. And once you do this step, so it's basically a quick journey. And then the next step is you just have to enter your name and submit the document. So that's how the KYC process works. It won't take you a lot of time. Now I'll quickly just go through the once your profile is up, once your profile is approved and you've transferred funds, how does the fund transfer work, and how can you buy and sell? So let me switch accounts. Pick a test account. So you require your PIN once you transfer funds. So this is like a test portfolio that I have, and so here, once you've transferred funds, you can see the cash that you have, your invested amount, and what is the value and how your portfolio is done. Again, the same view on the dashboard. Now, if you want to, let's say, buy or sell, for example, you want to buy some Alibaba. One of the interesting things is, so apart from no commission, we have what is called fractional investing. So basically allows you to buy fractions of a share. So you don't need to, if the market price is $264, you don't need to buy one full share. You can also, let's say, invest $10 to start with, and you can place an order, and there's no commission. So basically, once you put a $10 order, you get $10 worth of shares. And once you place the buy order, since right now the market is closed, your order goes into a pending queue. But then as soon as the market opens, it's about 2.5 hours at 8 p.m. Your order goes through. So that's essentially so you can buy or sell at any point in time, or place orders at any point in time rather. And then a couple of things that I'll walk you through before just lastly talking about fund transfers. So in the history section, you can of course track all your transactions that you've done. You can also see that dividends are directly credited into your vested brokerage account. So for example, in this account, there was a 14 cents of JP Morgan dividend, and then the tax was withheld here. So similarly, you can see your buy, sell, etc. Then you get monthly statements as well as trade confirmations here. And then what you can do is at the end of the tax year, and now we'll be doing quarterly as well, you can basically see all your tax documents that you need to do your filing. We provide to you in the localized tax filings. Essentially, nobody else does this. So in INR, we'll tell you according to the income tax regulations how much capital gain you made and how you have to file your taxes. So it simplifies it a lot. For the first time, it's a new experience, but once you get used to it, it'll be straightforward. And then we give you the reference US document as well. Now, the last thing I'll talk about is the fund transfers, both ways. So you can add dollars or withdrawal as well, right? So to be able to add funds, now when we started off, one would have to go to the bank branch, fill a bunch of forms to be able to do this kind of a remitting. Over the last 1 year, we've worked with the banks to simplify this process significantly. And so now with ICICI, HDFC, you can do this online through your net banking. So we give detailed instructions as to how you can do that. With some of the others, we have pickup services for the forms to be filled. They'll be going online soon. So that's the process with kind of existing accounts that you might have. If you don't have any of these, then we give you the pre-filled forms that need to be submitted to the bank to be able to transfer. In terms of somebody who has an international bank account or is an NRI, you can basically click on non-Indian bank and get your transfer done from there. So we give you the instructions, you can transfer it from your international bank account. So if you have, let's say, picked HDFC, put in an amount, what we'll do is we give you detailed instructions as to how you can do the transfer through HDFC's net banking. Now, there are certain fees involved in the transfer and you should be aware of them as you start investing. So it depends on the bank, but typically a bank charges like about 1,000 rupees of a fixed fee when you transfer the fund. And they have two components, 1,000 rupee fixed fee, and there's an FX markup, which ranges between 1 to 2% depending on the bank again. So now what we're doing is working with a couple of banks to reduce that substantially, and we should have some updates soon. But at least for now, the process has become online and it's much more streamlined to transfer funds internationally. To be able to withdraw funds, what you need to simply do is you need to place a request essentially. You'll see how much settled cash is there. You just need to tell us how much money you want to withdraw and need to give us the details. If you're a premium customer, you don't get charged the $11 fixed fee, and the money comes directly to your India bank account. So that's the process to withdraw. So if you just go next, we'll ask you for certain details in terms of your bank account. But that's it. Not much more that needs to be done. So that is it. Lastly, we have a referral program, which if anybody who opens an account using your referral link, you get $5 that are credited directly into your vested brokerage account. So I'll stop there. I spoke a lot. Hopefully, some of these things registered and something will help you out as you start investing internationally.
Thank you, sir. Thank you for showing us the demo of the platform and the presentation. So Now I'll hand over the mic to Abhimanyu, and he'll be taking all the audience questions. A lot of audience questions have already come in. So Abhimanyu, you can take the questions one by one. And guys, whoever wants to ask more questions, just keep the questions coming in. So what I've just observed from the presentation is basically these vests. They are like themes, and we can invest either in an electric theme, or we can invest in software as a service in a theme, or cannabis as a theme. And can we create our own themes as well, sir? That is one question that I had. If we wanted to create our own theme, like a Finvent's theme I wanted to create, so can we create our own vest like
Not at this point, but that's in fact something that we are working on. So
okay, so
the thinking was we start with our own vest and see how it goes. Now that people are excited and we have good feedback, now the next step will be, okay, how can we enable or give this technology to others as well?
okay, and one last question, sir, before we move on to the audience questions. These are the just the US based stocks and ETFs, or are you also providing for other exchanges as well apart from US?
It is only the US and NYSE and NASDAQ for now. I think at least for now, the goal is that people start at least investing internationally and geographically diversifying. As we see more and more people doing that, we look to enable direct access to other exchanges as well.
Okay, we'll move on to the audience questions now. Abhimanyu, just you can take over and start with the questions here.
Okay, so I have already noted down the questions. And now I think I'll be just taking the questions whichever are not common and already not answered in your presentation. I think the first question which I'm seeing right now is, how is Vested different from, say, Stockhill or any other platform?
Yeah, so I mean, there's over the last year or so, of course, this space has gotten a lot of attention, and there are multiple people who want to start investing or want to offer US investing. I think for us, the way we want to differentiate ourselves is one is on the platform. We want to create the easiest experience for somebody to be able to invest internationally. So that should be anything from our content, from the different presentations that we put out, our weekly newsletter that we give, along with our KYC journey, our fund transfer process. So basically, in terms of the end-to-end journey, somebody should have the easiest experience possible, and that's what we are working towards. That's the sort of product differentiation. The second is on the pricing. I think we're the most economical, where it's literally no commissions. We've been able to work with our broking partner to create a platform that makes it cost effective. So one of the biggest problems we saw was that somebody wanting to invest internationally, they would lose a lot of returns in just paying these $2, $3, $5 commission. It doesn't make it viable for somebody to invest if there's commission. So we wanted to always create a zero commission model. So that's the second on pricing. And the third is from a regulatory standpoint. We're regulated, or the only ones regulated with the SEC. That is the regulator in the US. So that gives a lot of comfort to our users, since that's the exchange or that's the market or the country that we are providing trades under.
Perfect. Okay, so the next question that I'm seeing is, what are the brokerage/government charges you are charged when you purchase a stock?
There is none. Basically, we don't charge any brokerage or commission. Whenever you place a trade, you'll get the exact amount of shares or the dollars trade that you put in.
Okay. Next up, we have a question from someone asking about a Reddit AMA which was held a couple of months back. They are saying that you had mentioned that you guys are considering a beginner material, something like Zerodha Varsity. Any updates on that?
Yeah, I mean, we definitely want to do that. Slow and steady getting there. Right now, the biggest focus remains that we want to make the product more seamless. So that still includes some of the pieces of the journey, which is the fund transfer, making it more cost effective. The KYC was something we were working on. We were able to launch that, improving the times for KYC approval. And so that is the biggest focus right now. I think once we're able to do that, we then keep focusing more and more on content on the US markets. Having said that, we do 2 or 3 types of content. One is our weekly newsletter. So you can subscribe to that if you want information on the US markets. The second is we are now doing a series of videos to help explain everything that's going on and different topics. So that will help as well. But there's a lot more to be done on the content front, and that's I think once we're able to solve some of these problems, that will be the next focus.
Okay, great. So next up, we have a question. Do you have any annual maintenance charges for the basic account?
No annual maintenance charges. There's an account opening fee, no maintenance charges. So, okay, let me explain that better. If you invest in a vest, if you invest in these portfolios, then we charge a 0.5% fee annually. But if you're investing in your own portfolio, then there's no fee.
Okay, perfect. Okay, so next up we have a question. How is the currency conversion calculated? Also, how is the dividend credited and the tax applicable? So I think this one already has gone through in the presentation, but I feel if you can just tell it again, it'll be more clear.
Yeah. So I'll answer dividend and tax first. So dividend basically gets credited directly in your account in dollars. So you'll see it reflected in your cash on the vested account. On the taxes front, there are no taxes on the US side. Taxes in India are as per unlisted shares. So basically, the income tax authorities treat this as unlisted shares in India. And so the threshold for long term is 24 months, and there's a 20% taxation post 24 months with indexation. And then if you sell it before 24 months, it is a short-term income tax, which is as per your capital gain. So, as per your income tax slab. So, it's all in India. And then the second thing is on dividends, there is a 25% withholding whenever the dividend is credited, and you can take credit for that in India. The first bit was on currency conversion, right? So that really depends on the bank. We are trying to work with them to make this more transparent. But as I mentioned, there's a INR 1,000 on average. There's a 1,000 rupee fixed fee, and there is a 1 to 2% FX markup that the bank has when you transfer. It's typical sort of banks to do that whenever you're exchanging currencies.
Okay, that was great. Okay, so the next question is, under which regulator does vested come in the case of any dispute or AMC associated risk come in case of vested?
So we come under the SEC because of our license, and the SEC has an online complaint redressal policy which you can leverage. So even the US residents use the same thing. So if anything, you can of course reach out there.
Okay, I think all investors are always worried about this thing. But another question we are getting is, in case vested were to ever shut down, what happens to our holdings and positions?
Yeah. I mean, rightfully so. If I were in their place, also I would ask this question, and it's a good question. So the answer to that is one: we don't touch the shares or the shares or cash at any point in time. All of the shares are held at a custodian in the US. So in our case, it's Citibank and Velox Clearing. There are two custodians, and they hold the shares. So basically, if anything happens to us, the shares or the holdings will always be safe. We work with a broker called DriveWealth in the US. So basically, DriveWealth is the one that holds the brokerage accounts, and irrespective of we exist or not, the accounts will always be held there. If anything were to happen to DriveWealth as well, right? So there, each brokerage account is insured up to $500,000 in the US. So it's rarely happened that the broker goes bust, but even if that happens, then there are multiple sort of layers of security that you have.
Perfect. Okay. So next question, we are getting that we are not some people are not able to see certain equities listed on the US indices. For example, they're not able to see certain ETFs and certain SPACs. So is there any reason for that?
Yeah, so there are a couple of limitations in terms of the securities that we show on the platform. One is the stocks that are shown are all need to be higher than 1 billion in terms of market cap. So that's the broker that we work with has this restriction, and so a lot of the SPAC or the SPACs are actually not higher than 1 billion until they reverse merge. So that's why we can't offer quite a few of them. But also, so we also have a sort of, we are an investment advisor, and so we have a limitation in terms of the number of stocks that we show, and it is about around 1,500 stocks. If there are any that you think are ones that you want to invest in but are not available, do reach out to us, and we on a weekly basis review and add certain stocks as well. But I mean, these stocks are more than enough for about 98% of our customers.
Perfect. I think I'll just take up another question exactly based on what you just said. So, one of the question was, is there any screener type for the US markets which you guys provide?
Oh, that's a good question. It's something, in fact, that's something that's part of the pipeline, and we're looking at it. I think whoever asked that question, if they could reach out on my email, it's viram@vestedfinance.co. I'd love to understand why they're looking for it or what they're looking for.
I will be saving all the the chat transcript, and I'll get back to that person, and I'll inform the email also. Okay, so
Sure.
the next question is, can we also invest in IPOs?
Cannot, because basically it's a little different the way IPOs work in the US versus in India. In the US, the retail access to an IPO, even for somebody living in the US, is very difficult. It's not like in India where we have a certain allocation that is fixed for the retail investor. Basically, almost the entire allocation gets taken up by institutions. And even if there is retail, it's like these ultra high net worth individuals in the US that get access. So it's a little tricky, but we want to enable IPO subscriptions. It won't be, at least it won't be this year. It will be sometime in the future.
Perfect. Okay. The next question is, how much time does the stock take to come into the our broker account?
It is a 2-day settlement cycle. So you can place a trade today, and 2 days later it will be settled, or within 2 days it will be settled. But
Okay.
the stock comes after 2 days.
Perfect. So next up, we have a question. I see a lot of questions, a lot of people getting confused in the disclosure statement. So somebody is saying, can you please like elaborate in layman terms about the disclosure statement in the commission fees?
I'm not sure what they're referring to in terms of disclosure. So because of regulations, we have to make a commissions disclosure, which we do in terms of whenever we mention zero commission. We basically have to give a disclosure that this is only commission. There might be other fees that are involved, which is like our account opening fee, etc. So, in fact, as per our SEC license, we have very strict marketing guidelines in terms of what we can or cannot say. Like, for example, we cannot have testimonials on our website. We cannot mislead somebody saying that Vested is a platform by putting up random people. So we don't do that. So because of those regulations, we have this commission disclosure as well, which basically talks about the fact that we don't charge any commission, but there might be other fees involved in the process, like the foreign exchange conversion, like the account opening fee, and that's something that we make very clear. So it's an attempt to keep everything transparent.
Okay, I think that should answer the question. If not, maybe you can put the question more briefly in the chat box. Whoever had asked it. I'll move on to the next question. The next question is, if an NRI were to invest using your platform, will he require the same documents?
Almost the same. So what we'll need for an NRI is basically a local address proof, and we need a local tax ID. So so essentially, in terms of the documents, that will be the change. But apart from that, everything else is the same for the platform, on the platform.
Okay. Another question based on the NRI we are getting is, any return document we have to be required to be filed in the US?
Nothing in the US, no. So the same form we file, it's called the W8BN. Basically, we tell the US authorities whenever you're opening an account that you're a non-US resident. So there is no tax requirements in the US.
Okay. Another question we are getting is, will we get holding reports from US just like we get from CAS report from CDSL or NSDL in India?
In fact, I was just recording a video today explaining that. I'll share it with you guys. But basically, you don't, because the structure is different in the US. So in India, for example, we have CDSL, NSDL, right? So we have these depositories where we have demat accounts. So we get direct communication from the demat from these depositories. But in the US, there is no depository. There is a custodian and there's a broker. And so the broker statements are actually the source of truth. They are the equivalent of these NSDL, CDSL statements that we get because the structure is different. So short answer is no. The broker statements are the ones that one can use to verify their holding.
Okay. I believe that there was a demo showing how exactly one can transfer funds through Indian accounts. So we are getting another question key. How about an NRI? If I have a FCY account, can I tie up that account with Vested?
I think they mean foreign currency accounts.
Yeah, foreign currency account.
Yeah. So if it's, I mean, you can basically transfer through any bank account that's under your name, which is anywhere in the world. But it has to be under their name. That's the key criteria for anti-money laundering.
Okay. Also, we have another question on the NRI basis. That is, can a NRI transfer money through exchange house?
Yeah. So I think by exchange house they mean like a Western Union or something like that. And yes, you can do that through an exchange house as well.
Okay. I think other than that, I'm getting a lot of questions which are already answered in your presentation. The first one was, can we invest apart from the US markets? I think you've already taken up that. There is also one more question which I'm quite confused about. I don't really know where he saw this, but somebody is asking, what is CRISPR?
Oh, CRISPR.
Yeah.
So it's basically it must be one of the emerging themes on the dashboard that they saw. It's basically essentially a gene editing new technology which allows gene editing to be able to essentially improve different traits in humans or animals. So there are these different companies that are working on this technology. So if you go on emerging themes on the dashboard and click on it, you see the different types of companies that are working on that. It's basically a new technology.
Perfect. Okay. The last question which I'm seeing out different from the rest is, do you also allow investing in S&P 500 index fund?
Yes. So you can look at there is IVV, which is one of the ETFs in the US that allows you to invest in the S&P 500. And I think while we are on this topic, one thing that people should also know about is the difference between, let's say, an S&P 500 in India versus an S&P 500 in the US, right? So basically, if you invest in the S&P 500 in India, it's of course more convenient because you can do it through your existing brokerage account. No need to transfer funds and all of that. But if you're investing directly in the US, one advantage you have is the expense ratio is actually almost 10 times less. Like for example, the Vanguard S&P 500, the ETF available in the US is like it charges around 0.05 versus here you pay 0.5%. So 10 times more cost that you don't see. And the other thing is that there is no tracking error. So since it's the actual ETF, there is no difference in the returns of the index versus an index that is investing in it through India. So those are the two advantages that you have if you're investing directly.
Okay. Up next, we have a question. What is the nominee process when we are making an account?
You can basically reach out to us. So there is a simple process to get a nominee added. Once you open an account, you could just ping us or send us an email. We'll help you get that done.
Perfect. We'll mention the email of both Vested team as well as Sir's email after the event in the chat box itself. Okay. I think last question which I'm seeing is, in case I have a fractional holding of a share, do I still get a dividend?
Yes, you get the equivalent of that fraction, and you also have equivalent fractional voting rights too. Pretty cool.
Okay. So last and final question is, broker risk is a concern.
Abhimanyu,
Why not have
before you take the last question, I'm just sharing a link for Vested because I myself got many messages from people on they can go to the account opening. So guys, this is a link, this is not a referral link, so we are not making any referral commission on if you open an account with Vested. So this is a non-referral link for making an account on Vested. So if you are interested, you can go on this link after the webinar. Don't go on this link right now. Just proceed with the, we'll proceed with the Q&A, but after the webinar you can go on this link, and like we've already seen in the demo, it's a very seamless process. Yeah, sorry, Abhimanyu, you can continue.
Right. Okay. So last, I think we'll just take the last and final question. It's already been more than an hour. It's almost an hour. Okay. The last and final question is that broker risk is a concern. Why not have yourself handshaken with TD, Ameritrade or E-Trade?
Yeah. So I mean, it depends. So these are more like kind of zero the equivalents in the US, right? They're consumer facing, versus we work with a broker whose sole business is helping companies like us provide access to investors, provide access to the US market for our customers. And so, which is why DriveWealth is somebody we work with. But they themselves are quite large. They have about 6 billion in assets and more than 2 million customers across the world. They power players in India, in Latin America, in Africa, in Europe. So it's a very stable partner that we work with, and that has allowed us to kind of launch this service pretty quickly.
Perfect. Okay. I'm not seeing any other questions right now. So we'll just give them about 20 or so 30 seconds if there are any more questions left. So you can still mention in the chat box. I believe we'll be willing to take a couple of more questions, maybe 1 or 2 questions. But I think if there are no more questions, we'll be ending the event. And on the final note, I'll just like to thank both Viram and Vested team for conducting the event. It's really wonderful, the initiative which they have taken towards global diversification, as well as trying to help Indian investors achieve more growth in their on their wealth.
Yeah, thanks. Sorry.
Yeah, continue. That's okay.
No, I was just saying thanks for the opportunity. I hope people got something useful out of this, and really it was a personal pain point for me to start this entire venture, and I'm hoping a lot of other Indians who are consumers of these brands also now get to create wealth out of them. So more power to all of us. We've seen over the last couple of weeks how the retail investor is actually very powerful, and hoping to give more and more power to investors like us.